Another rate hike by the Bank of Canada on July 12, 2023 seems very likely. It appears that the Bank of Canada is set to increase its bank rate on July 12, 2023, according to Economists' sentiments and multiple articles from reputable sources. The general consensus among economists and the market is that the central bank will proceed with another rate hike, possibly by 25 basis points, taking the rate to 5%. The news articles that follow reaffirm this expectation, citing factors such as strong economic growth, inflationary pressures, rebounding housing market, and the need to bring inflation under control. The upcoming economic data, including inflation figures and labor market indicators, will play a crucial role in the Bank of Canada's decision. Bank of Canada expected to raise interest rates one more time, capping at 5%. Economists predict another 25 basis point hike as early as July before increases stop completely, Bloomberg News. The Bank of Canada is expected to raise interest rates by 25 basis points in the coming months, according to economists surveyed by Bloomberg News. The June 23, 2023 article by Bloomberg says that the tightening cycle is projected to cap at 5% in the third quarter, which would be the highest level since 2001. Analysts have revised their growth expectations for 2023 to 1.3%, up from 1% previously, while trimming forecasts for next year to 0.7%. Inflation is expected to reach 3% by the end of the year, compared to a previous estimate of 2.7%. The challenge for economists lies in predicting the end of Governor Tiff Macklem's rate hikes, as economic growth and household consumption in Canada have been stronger than anticipated. Similar challenges are being faced by central banks worldwide as inflationary pressures persist. In Canada, markets predict the final interest rate hike could occur as early as the next meeting on July 12, with a 75% likelihood of a move at that time according to overnight swaps traders. Economists have also delayed their estimates for when Canada's growth will start to slow, and a technical recession is now the base case for the country's economy in 2023. Why the Bank of Canada will likely raise interest rates again, and maybe again. One and done. Not likely, say economists and the market, which predicts one, maybe two, more hikes, the Financial Post. According to an article by Financial Post in June 2023, economists and the market believe that the Bank of Canada is likely to raise interest rates again. The recent rate hike by the Bank of Canada indicates that further increases are possible, as the central bank aims to achieve price stability and the 2% inflation target. The strong first quarter GDP and early estimates for April suggest that the Canadian economy will maintain its momentum in the second quarter. Additionally, the housing market has rebounded quickly, although the impact of rising rates on variable rate borrowers is yet to be fully felt. The Desjardins economists predict higher growth for the second quarter than the Bank of Canada's forecast, and this momentum is expected to carry into the third quarter. While there was softer than expected jobs data after the rate hike, economists emphasize that one reading should not be overemphasized. Inflation is expected to decelerate, but the underlying inflation remains between 3.5% and 4.5%. Given the challenges of bringing inflation back to the 2% target, the article suggests another rate hike in July and possibly beyond. Will the Bank of Canada hike rates again? This week will decide. Variable rate borrowers hold their breath ahead of a crucial week of economic data, CBC News. In an article published by CBC News on June 26, 2023, the article discusses the upcoming week of economic data that will impact the Bank of Canada's decision on interest rate hikes. The article highlights the significance of this data in determining the course of the economy for the rest of the year. The Bank of Canada has been increasing interest rates to control inflation, with the expectation that higher rates will reduce consumer spending and slow down the economy. However, economic data this year has consistently shown stronger performance than expected, such as GDP growth and job additions. Retail sales figures also indicate continued consumer spending, despite higher borrowing costs and inflation. This week's data will provide insights into inflation, with expectations of a decrease in price growth. Economists will closely monitor the core inflation rate, which excludes volatile elements like gasoline and food. Additionally, GDP numbers and surveys on business and consumer expectations will offer further insights into the state of the economy. While most economists anticipate another interest rate increase, significant downside surprises in the data could potentially change this outlook. The Bank of Canada aims to see evidence of economic growth slowing further before reconsidering its rate hike plans. Overall, the article suggests that the upcoming economic data will play a crucial role in the Bank of Canada's decision on interest rates and provide insights into the state of the Canadian economy. Inflation rose to 3.4%, but Bank of Canada poised to hike rates again, The Globe and Mail. A report by Statistics Canada, Canada's annual inflation rate dropped to 3.4% in May, down from 4.4% in April, according to The Globe and Mail on June 27, 2023. This decline was largely due to favorable base year effects, as commodity prices surged after Russia's invasion of Ukraine in early 2022. However, core inflation measures, which exclude volatile components, continue to hover just below 4%. Despite the decrease in inflation, the Bank of Canada is expected to raise interest rates in the coming months, potentially as soon as July. The central bank is concerned about inflation remaining above its 2% target and aims to bring it under control. Grocery costs, mortgage interest costs, and rental prices have been significant contributors to inflation. The Bank of Canada's rate hikes are having an impact on mortgage interest costs, as homeowners renew their mortgages at higher rates. The bank's governing council believes that the disinflationary momentum necessary to reach the 2% target could be waning. Financial analysts expect the Bank of Canada to raise interest rates by a quarter point at its next rate decision in July, potentially reaching 5%. TD Bank expects Bank of Canada interest rate hike in July, Bloomberg News. According to TD Bank's Deputy Chief Economist, Derek Burleton, TD Bank has upgraded its forecast for Canada's economic growth and expects the Bank of Canada to raise interest rates again in July, according to a June 26, 2023 article in BN and Bloomberg. The forecast includes an increase in the policy interest rate to 5%. A Bloomberg survey of 25 economists also suggests a rate hike to 5% on July 12, coinciding with the release of the bank's monetary policy report. TD predicts interest rate cuts to begin in the second quarter of 2024. In terms of inflation, TD expects elevated core inflation for the rest of 2023, but notes that broad inflation remains persistent. TD also anticipates that the U.S. Federal Reserve won't reach its 2% inflation target until the first half of 2025. Early cracks in Canada's labor market won't prevent a July rate hike, RBC Economics. The upcoming labor market data will play a crucial role in the Bank of Canada's decision on whether to raise interest rates in July, according to an RBC Economics article on June 30, 2023. While Canadian labor markets remain tight, job openings have been declining, and may saw a slight increase in the unemployment rate. The confidence of workers in labor markets, as indicated by the rate of job quits, has also been decreasing. Despite almost half of businesses experiencing labor shortages, it is expected that the employment increase in June will not be sufficient to prevent a rise in the unemployment rate to 5.3%. The Bank of Canada is likely to announce a 25 basis point rate hike during its meeting on July 12, given that labor markets, although showing signs of softening, still have a historically low unemployment rate. The U.S. Federal Reserve is also expected to raise interest rates by 25 basis points after observing June's employment numbers, despite weaknesses in the jobs market. Bank of Canada to raise rates once more by 25 basis in July to 5%, Reuters poll shows, Reuters News. According to a Reuters poll of economists, the Bank of Canada is expected to raise interest rates by 25 basis points to 5% in July, according to a June 2023 article in Reuters News. The surprise rate hike last week indicated concerns about inflation not coming down fast enough. The rise in inflation to 4.4% in May and the rebound in the housing market suggest that rates may need to go higher. Most economists in the poll anticipate a rate hike in July, while a few expect rates to remain at 4.75%. Some economists even predict 2 more quarter-point moves in the next 2 meetings. The survey also indicates that the terminal rate forecast may be higher than initially expected. The tight labor market and improvement in the housing market raise questions about whether policy is tight enough at this point. What do you think? Will we see another rate hike on July 12, 2023 by the Bank of Canada? Let me know what you think in the comments. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.